All right, Craig, we do have to talk about this news that's just crossing about the Chinese internet regulator telling those companies not to buy NVIDIA just because of the sheer size of NVIDIA and its weight in the market. If we see NVIDIA moving lower on this report and maybe some pressure on the stock going forward, how does that shape your view of the market in general?
Well, Frank, a couple things first. I think a lot of investors and a lot of analysts have sort of backed out a lot of those orders from China. So while there'll probably be some impact to NVIDIA shares, I look at the pre-market right now and, we're off maybe $1 or $2 at this point in time. But technically, Frank, we need to see some sort of break below 155 on NVIDIA shares for it to really be technically significant sort of breakdown. And at this point in time, you would sort of look at that and say it's a check back to support at this point in time.
All right, right now looking at NVIDIA shares, they're trading at about 173.50. Shares pulling back about 0.75%. I want to move on to the broader market. Obviously, the big event today is the Fed decision coming up in the Jay Powell press conference. We're just showing the odds. Traders tracked by the CME, they see about a 96% chance of a 25 basis point cut, slim chance of a 50 basis point cut. How do you view this cut? And Jay Powell's conference afterwards. What are your expectations for the news conference? And is this a cut that the market needs? Is this the cut that the economy needs? How are you looking at it?
Well, Frank, there's a couple of things here to sort of unpack that question. First and foremost, there has been sort of this pivot from the Fed from focusing on inflation to focusing on the other part of their mandate, which is jobs. And we certainly heard that loud and clear over the last several months in here. 25 basis points seems to be already priced into the market. And then it's going to come down to what commentary do we then hear from Powell and the dot plot and those other pieces. If we get 25 and sort of no indication of another 25, perhaps in the October or the December meeting, I think the market is going to be disappointed and you would see a sell-off. I think most expectations across the street are 25 is in the bag at this point in time. And again, it's going to come down to the commentary. In terms of a 50 basis point cut right now, I think that'd be pretty unexpected. I'm not sure the market would necessarily like that initially at this point in time.
We're just showing the moves of the cyclical sector since Jackson Hole, where we saw what the consensus was a dovish Jay Powell signaling there's going to be some rate cuts coming up. What do you make of three of those sectors, industrials, materials, and financials, actually underperforming the market over that time, when in general you see investors put their money in those cyclical sectors ahead of a cut?
Yeah, I think at this point in time, we summed it up with our monthly report we just put out, Frank, calling it the rhythm of the rally. And at this point in time, there's a lot of investors that have sort of already bought some of these cyclical stocks, whether it's the housing, whether it's going to be stocks like Home Depot, whether it's going to be Lowe's, Builders First Source, some of those kind of names. But some of those have already been bought. We continue to find with our work, the best relative strength remains in tech, industrials, and also financials. And yes, there's been a little bit of weakness in the financials as of late, but we do see that the yield curve has been steepening, and that should ultimately be positive for the financial sector. And again, with the rate cut coming, we think that this will be sort of a shift down, and perhaps a steepening of the curve is what we'll probably ultimately see, which again would be good for the financial sector.
I want to talk about an add to the Piper Sandler Technical Opportunities portfolio. One of it's Xometry, a company whose CEO we've had on the show several times. The company's really focused on manufacturing. Is this, in your mind, a bet that manufacturing is going to increase with this rate cut? And also the Trump tax and spending bill expected to increase CapEx spending, and also the addition of bonus depreciation. Is that why you're seeing opportunities in Xometry?
Exactly, Frank. We continue to think that from here, getting some Fed rate cuts, one, maybe two later this year, is going to be a positive for mid and small cap stocks, number one. But also, number two, the model's performed well. We don't have to own the Mag 7. You and I, Frank, have talked about that a lot on the show. The Mag 7 has become the Lag 7, and there's other names down cap, such as the ones you were mentioning, and also things like Mueller Industries. We added that into the model portfolio, too. We also did add Broadcom, AVGO. But we don't have to own these Mag 7 names. They're great companies, but I don't think that's where the best performance is going to be coming from. And with the industrial sector starting to show improvement, a faster depreciation schedule coming up, there's a lot of stocks that can work, and it's going to be a broader rally than a lot of people, I think, are anticipating, Frank. So think about 6,600 as a pit stop, not a final destination for this market, and there'll definitely be more upside ahead, but we'll probably get a little bit of a setback before you see that kind of next big leg up.